What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we saw more selling across the board and we're right back to testing critical support. Will support hold up for the second test? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were down 1.25%, and as a quick reminder, we still do have this valid zigzag pattern. As long as SPY is staying above 433.5, we could still bounce off of these support levels and get a very impulsive bull rally that should at least take us back up to retest the previous all-time highs. Now, if you're looking at this and you think there's just no way this is possible, I would love to point your attention over to the Bear Bull survey, and you can see there is now only 15.8% of the people that are bullish. So when you get something like this, it's a contrarian indication that it's time to start thinking about different outcomes. And when everybody is getting bearish, it is typically very close to a bottom, and you are usually going to see a very impulsive bull rally, even if it's against all odds. So don't rule out the possibility that the zigzag pattern is right around the corner, which does mean any of these support levels could lead to a very impulsive bull rally. So the three critical support levels I want you to pay attention to are at SPY 438, 433.5, and below 433, we're getting a lot more cautious of a potential bear market, with the last line of defense for the bulls at 428, and below 428 we are likely going to see SPY in a bear market, which means it's at least going down to about $400 to close the gap. But we can't just say that we are going into a bear market. We need the price action to prove it to us, and we can't say that this is a confirmed zigzag until we get the bullish breakout, which is going to require SPY above 450. So right now we're in that middle grounds to decide if we're going into a bull market or breaking down and going into a bear market, and we don't have price action confirmation for either scenario. So to the upside, you're getting a lot more bullish above SPY 445, and we still do have a gap to fill at 446, and we should be back in the full bull market by the time SPY is back above 462, but we're getting a lot more bullish above 445, 450, and 457. So watch these very critical levels and follow the price action, because if you're getting overly sold on an idea and you're blocking out what the price action is telling you, you will get trapped in an unfavorable trade. So you need to be prepared for SPY breaking below 428, and you need to be prepared for SPY breaking above 457. And if you're trading the range in between, just be prepared for plenty of whipsaws, because as you can tell, this market is just switching directions each and every day. And so far, we're just stuck between about 438 and 446. So I do think next week will tell us exactly which direction we're going in, because this was options expiration day, being the third Friday of the month. So there's really other forces at work on a day like today. So watch these critical levels and follow the price action, and definitely pay attention to the volume, because if we do see high volume selling, it's a lot less likely that these support levels are going to hold up, and it's a lot more likely that we could enter the bear market. But don't forget that Bear Bull survey with only 15% of the people that are bullish. It is very likely that this is going to be a very strong impulsive bull rally when we finally do get the bullish breakout. Jumping over to the NASDAQ 100 triple Qs, we were down 2.29% today, so we still see plenty of weakness in the tech sector, and we did close below the support level at 340. So the last line of defense in the triple Qs for the bulls is down here right around 335, so we're very close to knowing if that level is going to hold up as support, or we're very close to knowing if we're going to get the bullish breakout if we can start closing back above 353. So watch this very strong support at 335, because if we break below that level, we're very likely coming back down to retest the lows right around 318, and we could close a gap at triple Qs of 315. Now you're getting a lot more bullish if we can get back above 353, and the next bullish breakout of resistance will be a close above 347, and we still do have a gap to fill right around 349. Above 353, we have a gap to fill at 360, and we're getting the bullish breakout on a close above 365. By the time we're back above 371, we're back in the full bull market, but we still have a ton of resistance before we know we're there. So watch the price action at these critical levels, and if we don't start bouncing soon, we could see the 20 simple moving average cross back below the 50 EMA, which will mean the triple Qs are entering the bear trend, and that will mean we're likely breaking through support, which will go hand in hand with the bear market scenario. On the Dow Jones, we were down 0.43% today, and the Dow Jones is still looking the strongest of all, because we still are bouncing and we're well above this support level at 340, but we are back below all the moving averages with the price action. So the next bullish breakout for the Dow Jones will be a close above 346 and the break above 347, and closing above our resistance trend line, which is now at 350. Above 350, we have resistance at 353, 356, and the gap close at 360. So as soon as we start closing above 350, you will want to point your eyes to that gap fill at 360. Now we're getting more bearish if we close below 340 with strong support to the downside at 333 and 330. On the Russell 2000 small caps IWM ETF, we were down 0.97% today, and we're very close to closing that gap at 202.5, but that gap has not yet filled. We're getting a lot more bullish above 204, and we're getting bullish breakouts above 208, and we should be back in a bull market in the small caps by the time we close above 212. We do have a gap to fill at the downside at 195.7 with strong support at 197 as well. So if we break down below that gap fill of support, you're more than likely looking for a retest of 193 and 191, and we will have the bear trend, which means the small caps are likely going into the bear market and will start trending down towards 170. On the ARKK ETF, we were down 4.44% today, and the ARKK ETF continues into the bear market, so it's more than likely coming down to close this gap at 54.7. Once that gap fills, we will have a gap to the upside at 66, so you're looking for strong resistance to the upside right around 66 to 67, and you're not getting bullish on this ETF until it starts closing above 71. On the VIX, we were up 4% today, and the VIX is still closing below 24, even though it is still elevated and closing above 20. You're getting a lot more cautious of a bear market if the VIX breaks out above 24, and you're getting a lot more bullish if the VIX starts closing below 20. So watch those very critical levels at 20 to get bullish and 24 to get bearish. On Bitcoin, we're currently down 2.86%, and Bitcoin is coming back down to retest the lows right around 39,000. Remember, below 42,000, you need to be cautious of a retest of support at 37,000. And if we break the support at 37,000, you're looking for a retest of 30,000. You can get more bullish on a break above 42 to 43,000, but try not to get bullish until we get that bullish breakout. From here, it looks more likely that we're coming down to retest support at 37,000, and then we'll decide where we're going from there. Although there is still the possibility we do bounce off support on the retest of 39,000. On NVDA stock, we were down 4.26% today, and NVIDIA did start pushing on that gap above, but did not fully close the gap at 230. So from here, it looks very likely for a retest of support right around 210. And if we break below support at 210, that will be a bearish breakdown, which means we're likely going down to support at 197. If we can bounce off support at 210, look for resistance at 223 and the gap fill at 230. And above that, you have strong resistance at 244 and the gap fill at 258. You're getting a lot more bullish if we can start closing above 244. Other than that, you're looking for a lower high and a continuation to the downside until we get that bullish breakout. On Tesla stock, we were down 3.66% today, and we did close below that support level at 996. So you're looking for a retest of support right around 974 or the strong support level at 969. If we break below the 50 EMA, look for very strong support at 937, and below 937, we're getting a lot more bearish, and we're more than likely going to fully lose the bull trend. To the upside, you're looking for bullish breakouts above 1036 and strong resistance at 1065 and the gap fill at 1087. And we're getting a lot more bullish if we can get that bullish breakout above 1145. On Apple stock, we were down 3% today, and we see Apple printing a very bearish engulfing looking candle, and we're coming back down to the support level at 165. So from here, if we don't bounce off support at 165, you're looking for a retest of 162. And below 162, we're looking a lot more bearish, which means we're more than likely heading down to support at 157 or 150. You're getting more bullish on Apple if it can close above 168, with the bullish breakout above 168 at 171 and the gap fill at 174. If we can get this gap filled at 174 and start closing above that level, we will be looking like we're heading to a brand new all-time high with the price target at 188. On the financial sector, we were down 1.13% today, and we're starting to break down below our support trend line, and we're coming back down into critical support. If this level breaks down, we should have the full bear trend, which means the financial sector is likely coming back down to retest the lows. On the industrials, we were down 0.11% today, and we're back over the 5 EMA for the second day in a row, but we need the bullish breakout above the 50 EMA to start heading up there to close the gap at 106. On the healthcare sector, we were down about 0.5% today, and we closed right on top of our support trend line, and we're still above the positively sloping 20 simple moving average, and we still do have the bull trend. On the energy sector, we are up 0.33% today, and we're still holding on with bullish price action and a bull trend, so it's still possible that we're trending higher before we see the correction in the energy sector. So jumping back over to the S&P 500, we are testing very critical support, and we're very close to knowing if the support levels are going to fail and we're going to break down and enter a bear market, or if we're going to see a very strong bounce off of support and head right back into a bull market. So watch the price action from here, know your critical levels, and make sure you know exactly what you're going to do in the event we break down through support or in the event that we break out above resistance. Your trading plan should not depend on the market only moving in one direction, so make sure you have a plan no matter where we go from here and then trade accordingly. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all of this market volatility, I think now is the best time to be a bank member. You can find out all of the information about Bank Trade Alerts and learn how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.